Hey guys. I am Zara. Today we start Preschool of Forex. In the preschool I'll cover the below topics of Forex. In first class I'll cover what is Forex. In second class I'll cover how do you trade Forex. In third class I'll cover when can you trade Forex. In fourth class I'll cover who trades Forex. In fifth class I'll cover why trade Forex. And in sixth class I'll cover margin trading 101. So let's start with first class. What is Forex? Quite simply, it's the global market that allows the exchange of one currency for another. If you've ever traveled to another country, you find a currency exchange booth at the airport to exchange your money into the currency of the country where you're visiting. When you do this, you've essentially participated in the Forex market. For an example, if an American, visiting to Japan, he has sold dollars and bought yen. Once he back, he went to currency exchange booth to exchange the yen that have left over there. And he noticed the exchange rates have changed. These changes in the exchanges rates that allow you to make money in the Forex market. The foreign exchange market is the largest financial market in the world. The New York Stock Exchange is the largest stock market in the world. It trades a volume of about $22.4 billion each day. If we represent it by a monster, it would look like this. When people talk about the market, they usually mean the stock market, so the NYSE sounds big. But if you actually compare it to the Forex market, it would look like this. Oops, the NYSE looks so puny compared to the Forex market. It doesn't stand a chance. See the graph of the average daily trading volume for the Forex market, New York Stock Exchange, Tokyo Stock Exchange, and London Stock Exchange. The currency market is over 200 times bigger. That huge $7 trillion number covers the entire global foreign exchange market. So you see, the Forex market is definitely huge. If we talk about the timing, Forex market is open 24 hours a day and 5 days a week, only closing down during the weekend. It starts from the Sydney, then moves to Tokyo, London, Frankfurt and finally, New York, before trading starts all over again in Sydney. Do you think? What is traded in Forex? The answer is money. In Forex you're not buying anything physical. The price of the currency is usually a direct reflection country's economy. In Forex trading, if you buy Japanese yen, you are basically buying a share in the Japanese economy. You are betting that the Japanese economy is doing well. Once you sell those shares back to the market, hopefully, you will end up with a profit. By the time you graduate from this school of pipsology, you'll be eager to start working with currencies. In Forex we have some major currencies. While there are a lot of currencies by which you can trade, but you should prefer to start trading with major currencies. In currency symbols always have 3 letters, where first 2 letters identify country name and third letter identifies country's currency name. Let's take NZD. NZ stands for New Zealand, while D stands for dollar. Easy enough, right? Now we will talk about the Forex market size and liquidity. The Forex market is an over-the-counter market. It's run electronically, within a network of banks, continuously over a 24-hour period. The Forex OTC market is by far the biggest and most popular financial market in the world, traded globally by a large number of individuals and organizations. The chart is showing the 7 most actively traded currencies. The dollar is the most traded currency, taking up 84.9% of all transactions. The euro's share is second at 39.1%, while that of the yen is third at 19.0%. Now I will let you know about the speculation in the Forex market. One important thing to note about the Forex market is that while commercial and financial transactions are part of the trading volume, most currency trading is based on speculation. The scale of the Forex market means that liquidity, the amount of buying and selling volume happening at any given time, is extremely high. From the perspective of a trader, liquidity is very important because it determines how easily price can change over a given time period. Now we will discuss about buying and selling currency in Forex market. When you trade in the Forex market, you buy or sell in currency pairs. Forex trading is the simultaneous buying of one currency and selling another. Currencies are traded through a broker or dealer, and are traded in pairs. Imagine each currency pair constantly in a tug of war with each currency on its own side of the rope. Exchange rates fluctuate based on which currency is stronger at the moment. We have some major currency pairs. All pairs contain the US dollar in these pair. The majors are the most liquid and widely traded currency pairs in the world. Beside the major currency pair we have major cross-currency pairs or minor currency pairs. Currency pairs that don't contain the US dollar, USD, are known as cross-currency pairs or simply as the crosses. Major crosses are also known as minors. The most actively traded crosses are derived from the three major non-USD currencies, EUR, JPY, and GBP. Now let me tell you about G10 currency. The G10 currencies are 10 of the most heavily traded currencies in the world, which are also 10 of the world's most liquid currencies. Traders regularly buy and sell them in an open market with minimal impact on their own international exchange rates. BRICS. BRICS is the acronym coined for an association of 5 major emerging national economies: Brazil, Russia, India, Indonesia, China, and South Africa. Now we will discuss about the different ways to trade Forex. Because Forex is so awesome, traders came up with a number of different ways to invest or speculate in currencies. Among these, the most popular ones are spot Forex, currency futures, currency options, and currency exchange traded funds, or ETFs. Currency futures are contracts to buy or sell a certain asset at a specified price on a future date. That's why they're called futures. Since futures contracts are standardized and traded on a centralized exchange, the market is very transparent and well regulated. This means that price and transaction information are readily available. Currency options. An option is a financial instrument that gives the buyer the right or the option, but not the obligation, to buy or sell an asset at a specified price on the option's expiration date. Currency ETFs. Exchange-traded funds or ETFs are the youngest members of the Forex world. A currency ETF offers exposure to a single currency or basket of currencies. Like currency options, the limitation in trading currency ETFs is that the market isn't open 24 hours. Also, ETFs are subject to trading commissions and other transaction costs. Spot Forex market. In the spot market, currencies are traded immediately or on the spot, using the current market price. What's awesome about this market is its simplicity, liquidity, tight spreads, and round-the-clock operations. In the school of Pipsology, when it comes to the specific way to trade currencies, we'll be primarily talking about the spot Forex market. So guys, in Preschool of Forex, first chapter What is Forex is completed. In upcoming video we will cover second chapter of Preschool How do you trade Forex. So stay tuned.